Hi, everybody, and welcome to the week ahead. I'm Tony Nash. Today, we're joined by Isaac Stone-Fish. Isaac is the CEO of Strategy Risks. He's the author of a book called America Second, and he lived in China for 7 years as the New York Times in the New York Times Bureau. So we're really lucky to have Isaac with us. We have Albert Marco, of course, and Tracy Schuchart. We're very fortunate to have them again today with us. So Isaac, welcome. And
Thanks,
we're
Tony.
really happy to have you. Our theme today that we're going to talk through first is how are foreign companies dealing with the political changes in China, or what should they be paying attention to on the risk side? We're looking at tech earnings and the impact that tech earnings will have on other earnings and headcount reductions and other things over the next few months. And we're also looking at crude oil inventories and refined product inventories. They're way below averages, and we want to hear from Tracy as to what's going on. Please take a look at our product, CI Futures. It's a forecast subscription product. It's $99 a month. We cover a few thousand assets over a 12-month horizon: economics, currencies, commodities, equity indices. So please take a look at that. The URL is on the screen. Thanks a lot for that. So, Isaac, welcome. Would you give us a quick overview of what Strategy Risks does?
Right, so Strategy Risks works with corporations and investors to help them manage and reduce their China risk. And with increased tensions between the United States and China and growing awareness of the liabilities in both China and the United States of working with the People's Liberation Army or the United Front or the Ministry of State Security or the Chinese Communist Party more broadly, it's been a good couple of months for us. And so excited to be joining you and chatting with you on these issues.
You must be working 25 hours a day. I have no idea how you get any rest right now with all the stuff that's going on in China.
Under drug right here.
Yeah. Okay. Isaac, I'm curious, with all of the political changes announced this week, of course, that's been way analyzed, a lot of different perspectives on things. I would warn people as they read through that analysis, just be careful of kind of some anti-China bias, but we have to kind of read things for what they are too. We saw changes in Xi's team that, to be honest, weren't all that unexpected. People have talked about this for months, but the fact that he actually carried through with it, I think, made people feel like it was a little bit unexpected. But it's certainly a hard turn to the CCP's communist roots. I'm showing a tweet right now looking at Xi taking his team to a pilgrimage where the Long March ended during the Communist Revolution. And so he's just, the optics around the hard turn to the party's communist roots are, front and center. So, Isaac, markets were spooked this week, of course. We saw orders from Beijing to prop up CNY and prop up Chinese equities. Obviously, didn't work very well. But with that backdrop, what does all this mean for U.S. and other foreign businesses? I mean, I know it means a million things, but if you had some top-level takeaways, what are the things that you're seeing that it means for, say, U.S. and other foreign businesses in China?
Have a really good understanding of leftist ideology. If you decide that you want to stay, which oftentimes we discourage, and if you decide that you don't want to reduce your exposure, which we always discourage, have a really good understanding of how communism works and read the tea leaves, spend a lot of time on analysis, understand that every Chinese company or every company in China that has at least 3 party members has to have a party cell. And for a long time, people overlooked that law, but companies like Alibaba have tens of thousands of party members. So understanding that you're partnering with the Chinese Communist Party and things that you used to be able to get away with, you can't anymore. I think the other high-level takeaway is with increased media, consumer, and congressional scrutiny on China, what happens in China doesn't stay in China. So the work that you do with a major Chinese charity, which does, say, party building exercises in Chinese orphanages, aka brainwashing Chinese children on party ideology, we can get that information here. Congressional staffers can read that, journalists can pick that up, and you're going to have to start dealing with the liability of that from a PR perspective. The final high-level takeaway, the more she marches to the left, the more draconian things get, and the more saber rattling we see with Taiwan, the more likely it is that the US and China go to war over Taiwan. Right now, I would say that's still not the base case. War is very avoidable. It probably won't happen, but it's a very concrete risk. And investors, and I would argue especially boards of major corporations, need to be discussing this risk. And perhaps the best thing to do with the risk is to say, okay, we note this, we're not going to change. But I think if there is a war, companies are going to have to face some pretty serious shareholder lawsuits because it's a viewable risk and you didn't do anything about it.
Right. So let me ask you, take two questions out of that. First is, in 2010 or 11, I spoke at the Central Party School in Beijing, and the person who drove, I was giving an economic update. I was working with The Economist at the time, and it was so surreal for me. The person who drove me to that event was a venture capitalist. And so I think the view that many people have of Communist Party members is, oh, they're these soft guys, they're capitalists like us too, that sort of thing. What has changed around the concept of Communist Party membership over the last, say, 10 or 15 years?
I think the perception, so when Rupert Murdoch in the early 2000s was going into business in China, he would downplay the importance of the Communist Party and say things like, oh, they're just like us. There's really no difference. And some people just join the party for opportunistic reasons. And some people do it because they believe, but they're fairly soft-spoken or gentle. And then there's the very hard security element of the party. And I think people are realizing that, for every venture capitalist, there's also the PLA secret agent or the MSS agent or the public security agent, and that these people are increasingly important in the Chinese system. And the other piece of it is that it used to be seen from a Western context, both PR and regulatory, relatively benign to be working with party members in the Communist Party. But after the genocide in Xinjiang, after Xi's increasing authoritarianism, people are not getting the pass that they had before when you and I were out there.
Right. And so I think it's really critical. Anybody who's overseeing a business in China has to understand modern Chinese history. You have to start from the Great Famine, really. I mean, start from the revolution, but really the Great Famine through the Cultural Revolution, through the 70s, through Deng Xiaoping, through, that era is really critical to understand what's happening today, right? Because that's when Xi Jinping grew up, and that's when his ideologies were formed. Is that safe to say?
It is safe to say. I think the other thing that we have to understand is we do have to be incredibly humble about our ability to understand what's going on at the top of the party.
Yep.
We have very little idea. People are going to keep speculating about that crazy video with former chairman Hu Jintao.
Yep.
We probably won't know what happened there for decades, I would guess. And I think when we talk about war with Taiwan, we talk about what's going to happen between the US and China, we have a lot of insight into how Biden thinks and almost none into how Xi Jinping thinks.
Yep.
We just need to bake that into our predictions.
Yep, that's absolutely right. And I cautioned on that earlier this week about the Hu Jintao exit. Like, it could be health. You don't know, right? It could be intrigue. You don't know. So none of us know. So let me also ask you, when you talk about, you had a tweet about potential China-Taiwan war earlier this week, and you talked about Chinese staff for American companies, or Western companies, sorry, and you talked about Western staff in China. So can we talk about some of those risks, like the real people risks for multinational companies who hire Chinese employees? And none of this is intended to be xenophobic. This is intended to be purely practical and understanding really what the risks are. And also with those foreign staff in China, can you help us understand some of those risks?
Yeah, I kind of was gonna ask something along that line, if I can just tag on my question to that one. Is, we saw a bunch of people or Americans pulling their staff from Chinese chip companies, right, lately. So I was wondering if you saw that, see that trend continuing and bleeding into other sectors besides just the tech sector.
I very much do. And I think there's two ways to think about this. One is the economic and regulatory. So increasing difficulty doing business in China, desire for localization of staff, Biden regulations that restrict the ability of Americans to work at certain Chinese chip companies. And then you have the potential for war. And the idea is that if the US and China go to war, American staff in China and also Chinese staff for certain American companies could be seen as enemy combatants. And we saw this with Afghanistan, we saw this with Ukraine. There's orders of magnitude more staff for Western companies in China than in these places. I mean, it's not even comparable, the numbers. And I think from an ethical perspective, I get really worried that people don't talk about war because then war could just be on us. And the United States has a terrible history of interning Japanese during World War II and harassing Germans during World War I. And I think with the dynamic with Chinese people here, we need to have a concrete conversation about it so that we can defend the rights of Chinese and Chinese Americans in America if we go to war. And from a corporate perspective and from a risk perspective, companies need to have exit plans for their staff in China because they're going to be dealing with major ethical and insurance risk issues if this happens.
And they can't just take the foreign staff out to Hong Kong anymore, right? Because that's it's not like a free zone anymore. So.
Right. And you hear stories of people being smuggled out now, and I think we're going to hear a lot more of those, and that's going to be more and more common.
Yeah. So Isaac, what are we missing when you see the discussion about China right now and with American businesses? What are we missing? What's not being discussed that you're like, gosh, I can't believe people don't see this?
Congress does not want American companies to do business in China. And with the UFLPA, the Uyghur Forced Labor Prevention Act, we talk to a lot of corporates about that, and they don't seem to understand how to comply with the law. And that's the point. It's a law that's meant to deter behavior as opposed to shape behavior. So it's, okay, we can't invest in Xinjiang, but this company that we work with has a branch in Xinjiang. Well, don't work with that company. And I think the American political calculus of this too, people don't really get. I mean, Pelosi's trip, I think, didn't really bake into corporate behavior in the way that it should have, because people think this is a Republican issue. They hear Marco Rubio, they hear Ted Cruz, they hear some of the, awful remarks that Trump made, and they don't realize that Nancy Pelosi and Chuck Schumer sound almost exactly like Rubio and Cruz on these issues. They think it's a Republican issue. It's not a Republican issue. There are holdouts on the progressive left, there are holdouts on the libertarian right, but the US is pretty united about this from a government perspective. It's just not from a business perspective. And that's fine. You can have that discordance, but businesses need to understand Main Street and Congress feel very differently about these issues than they do.
Yep. So one last question on this, unless Albert, Tracy, you guys are going to come in, but do you think we'll see publicly traded American companies disposing of their China units with, say, a Hong Kong IPO? I mean, I know this is an old idea, but, better than nationalization, at least they can get some value of it. And, I think of like a GM or something like that, right? It's a huge business for them. So they could potentially either have that nationalized or they could make it public on the Hong Kong Stock Exchange or something. So do you think we'll see more of this? Yum Brands is the one that everyone knows about from 10 years ago or whatever. But do you think we'll see more of this? And if people don't do it now, is there a danger of a rush to the exits in, say, 12 months?
I think that's an excellent point. Ping An, which is a major shareholder of HSBC, suggested HSBC break up into two different banks, one headquartered in Hong Kong to focus on the China market and one in the rest of the world. And companies like Boeing, which has an airplane business that I think it's something like 14 to 18% goes to China, specifically the Chinese Communist Party, and then has a very important government contracting business, which is increasingly at odds with its relationship with the Chinese Communist Party, need to start considering these issues. I think you're right also on the timing. These things take a lot of time, and companies are very private with them for obvious reasons. So if they're considering them now and we're going to see announcements on it, and it doesn't require that much scrutiny from CFIUS or the SAMR, Beijing's regulatory agency, or other Chinese agencies, I can see these things happening. I think if companies are starting to think about it now, it's probably too late.
I think you're right.
Years process.
But in the same way that nobody wants to talk about war, nobody wants to talk about spinning off their China assets, right? But
yes,
you either do it now or it gets nationalized, or you do it for 10 cents on the dollar in a year or 2 years.
I think you're exactly right. And Tony, we should write something on this. I think this is a good time to talk about this issue.
Fantastic.
Yeah.
Okay.
I mean, their other issue is capital flight out of China. Even if you decide to list in Hong Kong, is like, where's the money going to come from? It's not going to come from the West. You know, even the Chinese are starting to take their money out into Singapore and Macau and anywhere else they can get it out of at the moment. But I mean, I agree with Isaac on 90% of what he's saying. I don't think that war in Taiwan is even a remote possibility in the next 10 years, to be honest with you. The Politburo, Xi's inspired Politburo, it looks scary. There's no question about that. And the Western companies need to take a look at that, because it reminds me of the Nazis from the 1930s. Now, I'm not talking about what the Nazi crimes were, but just the mobilization of the country and the nationalization of corporations and, them starting to boost the economy internally. It's most likely going to start happening, and they will nationalize companies that they see are instrumental for their vision going forward.
Yeah, I mean, honestly, I don't know why anybody related to SAIC, Shanghai Automotive, why would that not become the property of SAIC if they're really taking this nationalist bent? That's a real risk, right? I think. So any of these guys really need to pay attention and really start to evaluate what is their path going forward. What is their path for Chinese staff? What is their path for foreign staff there? What is their path for IP that's shared between those units? These are real head scratcher questions. Okay, Isaac, thank you so much for that. This is so insightful. I'd love to spend 2 hours with you on this, but we've got to talk about tech earnings. So, Albert, tech earnings are super bad, right? Super bad.
Super bad's an understatement.
Yeah. Horrific wreck, it's a tech wreck, all that stuff. So, we can talk about, what missed and kind of, we all know what's missed. That's been analyzed over the last, say, 24 hours or say a few days or whatever. But I guess what I'm most interested in tech is staffing. So the vacancies in the US workforce has been a big issue for the Fed. Okay. And I'm showing right now on the screen the Meta's stock price from $350 all the way down to, I think it was $97 yesterday. And so that, that's just over 1 year. It's incredible, right? So a lot of these tech firms have been over hiring. They've been putting out job recs for things where they just want to target one person and they don't really want to target the job and, all this stuff. They've almost been hiring based on their valuation rather than their revenues. So in terms of those productivity metrics, do you think we'll start to see headcount reduction in tech, or they've been saying, hey, we're just going to slow down our hiring? So do you think they're going to stick to only slowing down their hiring, or do you think we're going to see this kind of tech, halt and kind of shrink of the tech workforce?
Oh, absolutely. Going to shrink the tech workforce, but that's not going to come till after midterms. I mean, nobody wants to be in the, line of sight of Biden's firing squad, over firing 10,000 people just before midterms happen. So, right. But afterwards you will, probably after Christmas, you'll actually start seeing quite the number of job layoffs in the tech industry.
Every time I've worked with a tech related firm, the pink slips come literally the week before Christmas.
Yeah. And then that You know what I mean?
Terrible.
And I mean, I don't think that people understand how bad these tech earnings are, right? You see,
Oh, yeah.
we can note, Facebook and Amazon and whatnot, but they had tailwinds of inflation of an extra 10% because CPI, they say it's 8%, it's really like 20%, right? So they had an extra 10% baked into their earnings that people don't really catch, right? And even with that, they're down 30-40%. Amazon lost 25% in 2 days. Amazon.
Yeah.
I mean, these are just astronomical
Which
figures.
is a solid company. I love Amazon.
Oh, yeah, I don't have
solid
any
company.
Yeah, it is a solid company, and I like Amazon. I like their tech. I like their delivery service. Everything they do is correct. But I mean, realistically, them and along with another dozen tech names were so overinflated for the last 2 years because the market just kept pumping up to just the high heavens that this was just. It was an easy call that tech had to come down. And on top of that, tech is based on zero rates, and we're not going to see zero rates for years.
Right.
For years.
Yeah, that's fair. Okay. So, one of the hedge funds, I can't remember who it was pushing Meta or Facebook now, I guess, again, to cut 20% of their workforce. Do you think something like that is possible? I mean, that sounds like a lot, but given what's happened with their valuations, do you think a 20% cut is possible? Do you think more or less is possible?
And 20% is a lot. Usually when you have over 12%, you start looking at a company as going into bankruptcy. That's one of the signs that you look at. So 20% is way too much. I don't think that's going to happen.
Okay.
Maybe 7 to 10%,
Okay.
staggered over the next few years.
Okay, that's fair. But I mean, they hire a huge number of people. What that would do to wages in tech would be immediate, right?
Of course.
$300,000 22-year-old dev, that would be gone.
Well, yeah, that cuts into the state's budgets also because they take those tax revenue and whatnot. The other thing that we should talk about is China's mixed with the tech industry. I mean, now that the U.S. Congress, like Isaac was saying, is actively trying to prevent companies to go over there, I don't know where tech earnings are going to come from. I just don't see it. They're taking away massive market share. They're taking away supply chains and semiconductors and everything. I don't see any silver lining tech for the next 2-3 years.
Yeah, that's fair. I think they need to right size their organizations and really focus. Plus, there's more competition in the ad market, so you're not going to see ad rates necessarily rise from here for some time. So yeah, I think there's a lot of headwinds.
What also, I'd actually like to get Isaac's opinion on this one is no one's talking about the tech industry in China competition with American companies in countries like India, right? Because you have Chin Data and a couple other countries that are massive and generate a ton of cash out of there. And nobody's talking about the competition level in India between the two. And I don't know if you've heard anything, Isaac, but that's something that I wanted to start looking into.
I think that's an excellent point because it doesn't get nearly enough attention. And the market for the rest of the world for most of these companies is larger than the market for the US and China combined.
Mm-hmm.
So there are a lot of contested spaces, especially in countries like India, Brazil, Indonesia. And I think the lens through which we should see it is the political battle between the US and China, because both countries are really pushing all of these third countries to be more sympathetic towards their way of view, because so many of these tech companies can be hobbled by regulations. We see that with Huawei. We see that a lot in India, where there's a lot of distrust for Chinese tech companies, a lot of restrictions on the ability of Chinese tech companies to operate. And so it is good. It's protectionist, but it's good political warfare for both sides to be making these arguments in countries around the world. And it is good business for these companies to be spending heavily on government affairs in all of these companies, in all of these countries, and figuring out how they position their relationship with the government, whether it be the Chinese government or the US.
Yeah, and that's something that I actually criticized the Biden administration, that they've been so hard on India about using Russian tech and Russian oil. It's like, come on, you guys got to be a little bit pragmatic here. You know what I mean? They're stuck between a rock and a hard place, with China and Pakistan. So
true.
I think that's they buy huge amount of weapons from Russia, and they buy those in large part to defend against China.
Yeah.
Yep. Very good. Okay, great. Thanks for that, Albert. Now, Tracy, let's move on to crude inventories. I've got a tweet up where you talk about there was another draw this week. And we saw a draw on global inventories. As we have inventory drawdowns, we have OPEC supply contracting by what, about 1.2 million barrels per day, something like that. Russian crude sanctions starting. We also have, with the SPR, it was interesting to see the US became the third largest exporter of crude, I think last week or something, with over 5 million barrels per day because of the SPR draw.
Yeah.
So we know global inventories are low, but when does that start to bite? I mean, I feel like the easy answer is, well, after the SPR stops, right?
Well,
but what more to the story is there?
I mean, I think it really depends on where you are. I mean, we're already we're already seeing the SPR. Those draws are kind of dwindling down, right? We've gone from about 7-8 million barrels per week to 3.5 million, and even though that's still a lot, that's been part of the reason why we're exporting, because we've kind of first we were drawing down sour crude because that's really what U.S. refiners need, but at some point that's almost gone. So you had to start releasing sweet crude, and we can't do anything with those barrels. And so they are making their way to China. They are making their way overseas. And that's why our exports have increased over the last few months there. In particular, we're kind of seeing an uneven balance where we're saying global inventories are still drying, right? US inventories are drying by all intents and purposes. I mean, we had a 2.8 million build, but we also had a 3.5 million SPR release and an adjustment factor of 15.8 million barrels. So so we are drawing, and really, if you include the SPR, we had a draw of 5.9 million barrels total crude plus products this week. But we are seeing, what's interesting is we are seeing Japan, their stocks are actually going up because they're stockpiling like mad right now. So they're buying everything from everybody and stockpiling, and they were giving subsidies for companies to buy that in their SPR. So Japan's kind of had a different kind of way of looking at things, and the rest of the world's just it's just dumping, but they're literally stockpiling. China did stockpile for a while, but really their SPR is down, obviously, from the 2020 highs. And they're not stockpiling as much, but if they, with China, and I know that there are demand problems going on there, but if they increase those export or import quotas for the teapots, then we're going to start seeing them buy a lot more.
By teapots, you mean the small refineries, just for
right,
people who don't.
Correct,
right.
Because they're talking about possibly raising those import quotas.
Okay.
But we won't really find that out until December, and that'll be into 2023.
Okay. So just a question on both. On Japan, first of all, with the yen at these dramatic lows, they're stockpiling, and it's hugely expensive for them. Right? It's not just kind of incidental decision. This is a really intentional decision for them to stockpile. So are they partly stockpiling on geopolitical concerns?
Yes, absolutely. I believe so. And, all around, because we really saw them, that sort of started to kick off, in March.
Yep.
Right.
Okay.
After Ukraine invasion, and and same with LNG, right? They've been, they've always been huge importers of LNG,
Yep.
The world's largest, but they're importing even more because they're kind of seeing what's happening in Europe right now, and they don't want that to happen to them.
Right.
I think it's a little bit more than that. Also, I think that they see that, or probably even got cues from the U.S. that Japan's going to be a manufacturing hub to try to pick up the slack from China. So I think they're preparing for that in 2023 and 2024.
Interesting.
And on top of that, the price of oil right now, I mean, that's still discounting China not stimulating, because once China stimulates, I mean, the demand's just going to skyrocket.
Okay, so all three of you guys, I want to ask about that China stimulus. So you guys all know China Beige Book, and they've been saying everyone's really foolish for thinking China is going to stimulate. and they've been saying that for something like 6 months, right? And I heard a lot of people say, "Oh, they'll stimulate after the Party Congress." I said that too, and we still haven't seen that. Do we think that we're going to see stimulus in China, say before Chinese New Year, which is what, February?
I would say absolutely not. I think the real stimulus for the Chinese economy too will be less government-led infusion of capital and more a relaxation of COVID concerns. And I think that's going to be a lot more likely after Spring Festival and then after the March Congress, because you have the appointment of the premier, you have some important events there, but you also don't have to worry about mass contagion with hundreds of millions of people wanting to travel. So I think the base case for the opening of the economy and then potentially economic inflation is after the Congress, after Spring Festival. And who knows? It's very hard to predict, but that would be my best guess for that.
I think that's really solid. What do you think about that?
Yeah, I think COVID zero policies are going to be still in place until March. There's no question about that. I think stimulus happens around the same time that they think that inflation is under control. I think that's pretty much their driver at the moment, because if they stimulate, price of copper and oil and everything in the country is going to go to the moon, and they know this. So I think it really depends on inflation, what the U.S. kind of can do to tame it.
So when do you think they'll think that inflation is under control?
I think close around March, after the U.S. announces the end of quantitative tightening and whatnot. So it'll probably be a coordinated effort.
Okay, so Tracy, if they just let go of the lockdowns, what does that do to crude demand?
Well, definitely. I mean, then we obviously start to see that rise because, they're locking down millions of people at a time. It's not, you know what I'm saying, in entire cities, and not for, a couple days. We've seen some cities lock down as long as 2 months.
Oh, man.
So, so I think as soon if they start relaxing that, we're definitely going to see demand come flooding into the market. And again, China hasn't really been stockpiling this whole time during this, which, they have a little bit from their lows. If we look at, kind of their SPR, but not a lot, not as much as everybody thinks they are. Everybody thinks they are because oil prices are lower and they like lower oil prices, but really, comparatively speaking to how they've purchased in the past, the SPR, it hasn't been as much as most people think.
Okay. That's interesting.
Tracy, do you think that they could be? First of all, I don't trust the data of China. I don't know anything.
Well, what we can see from, what we can see from satellite systems, right? We have no idea what their underground storage looks like or anything of that nature, but what we can tell and what we can track that's actually going into the country.
Do you think that they can hide that in tankers on the sea, for a while?
Yeah, absolutely. I mean, they've been known to do that before. Absolutely. They've used Myanmar
Singapore also, I believe.
Well, yeah, Singapore is a little bit harder to hide because it's so huge and there's so many people are tracking vessels there. So they kind of like to kind of stay away from there when they're kind of trying to hide stuff.
Yeah.
But definitely, I mean, they've, hidden purchases from Venezuela through Singapore, through, other ports in that area. So, definitely.
From what you can see, from the best guess, I get it.
From the best guess, what you can see, what you can tell, what, satellite services have picked up, like, Kepler or whatever.
Okay, let me kind of close off with this question. So I just filled up with gas in the US last night, and I posted this price in Texas is $2.95.
Nice.
So I'm sure you're all jealous, but but I said, will this be 30% higher by the end of the year? Because post-election, SPR releases stop, other things. Do you expect gasoline to rise say as much as 30% before the end of the year, since SPR release and other things are stopping? Or do you think we're kind of in this zone that we're going to be in for a little while?
Well, I think that generally, I mean, this is kind of lower demand season anyway, right? I mean, usually, typically, we don't see prices really start to rise again until about mid-December, just seasonally speaking, right before the holidays. Or Christmas in particular, and everybody goes on vacation, et cetera, et cetera. But, you know, I don't know if 30% might be a lot for this year, but definitely for next year, we're going to have some problems because, you know, they took that last 10, 15 million barrels and they pushed that out to December. So we'll still have some releases
Okay.
then. So I think they did that last, it was actually 14 million barrels that are left. And so they did push those out until December. So they're kind of going to trickle it out in order to kind of control prices a little bit.
Okay. So the selection bias of people telling me that I was right is wrong.
Yeah.
Thanks for that.
I think it'll probably depend on where you are in the country. You know, depending on the state
Yeah,
tax.
absolutely. I mean, if you're in the Northeast, you're gonna have a huge problem, right? Because they have the same issues going on that Europe does. They don't have any pipelines, they don't have any storage, and they don't have any refining capacity. So this winter, you know, especially with the diesel shortage, you know, you'll probably see the highest gasoline prices, obviously, in California, and then the Northeast will be the next higher.
Great. Okay. And I just want to say to everybody, I'm not promoting the gasoline price as a reason to move to Texas. I mean, it's all scorpions and rattlesnakes and really terrible bagels here. So please don't move here. It's just, you know, it's just an incidental benefit of living in a place that's a pretty rough place to survive. So anyway, guys, thank you so much. Isaac, really invaluable. I don't think we could have gotten this perspective from anybody else on earth. So I really appreciate the time that you spent with us. Albert, Tracy, thank you guys. I always appreciate your point of view. So thanks very much and have a great week ahead.
All right,
Thank
thank
you.
you.
Thank you. Okay. Okay, you guys ready? What's your t-shirt today, Albert?
Michigan, buddy.
Oh, you're killing me. Okay.